Actually, I have a theory on Satoshi Nakamoto. I think he's from the year 2060, and a bunch of people realized like the world has gone to poop, and they know the answer to the problem, and they send someone back into the year 2008 to release this white paper, the Bitcoin white paper, which is so, magically written, and the way they released it and that whole story is pretty like crazy that one person, one nerdy guy that knows how to do cryptography was able to do that. So I think it's someone from the future that was sent back, but some people say it's Elon Musk, some people say it's, I don't know.
Aliens.
Aliens, yeah. Feel free to interrupt, ask questions. Trying to make this as informal as possible, but I also think this is really, really important for everyone to know. And the way I see it, very few people actually have years and years and years and hours a day to go and read about all the things that make up why this thing called Bitcoin is a thing. But I was really lucky to actually be in that place over the last, 5-ish years. And so I feel like because I was really lucky or blessed, however way you want to look at it, it's my responsibility to make sure that whoever's willing to listen and maybe at least humor me, it's my responsibility to make sure I share this information, because what this is about actually affects all of us. And the more people that can get in earlier, the more opportunity is created for the people, the real people, not just the extreme wealthy and powerful. All right, so I'm going to dive in. A lot of folks, you guys don't really know my background, but this is my background, and this is who I am. I'm sort of like the portfolio entrepreneur. I do a lot of things at all times, so people think I'm a little bit crazy, but that's okay. I spent about 12 years in management consulting. I spent a lot of it in business intelligence solutions, so a lot about databases, which is why blockchain makes a lot of sense. I also spend a lot of time in startups, so I do investing now, but I used to also be a full-time startup entrepreneur, like in Silicon Valley, raising money. I actually raised my first seed fund while 8 months pregnant, so it's possible. I've been in the world of crypto since, say, 2016 or so. So I did an ICO back in the day, and we raised $32 million from a worldwide audience of all in crypto, literally in less than a month, which was crazy, right? And today I do a lot of work in policy. So, my focus is really policy work and education, which is why this work that we do with Coding Dojo is really near and dear to my heart, because more people need to know about this. And then, of course, I have my family who, I'm a mom of boys. They're the best things ever. All right, so you're not here to learn about me, but I think it's good to know about the context behind it. And Bitcoin has gathered the attention of a lot of folks, right? Not just you, but the media, the politicians, a lot of very, very, very rich, wealthy influencers, hedge funds, and family funds. And with numbers like these, it really does make sense, right? Like you have an asset class, a new alternative asset that's up 48% in the month of December, was up 170% in Q4, over 300% in 2020. And now if you're looking at price expectations, these are from the optimistic, because, Bitcoin could go to zero just like any investment. Price expectations for Bitcoin for this year is up to, $50 to $300,000+ per Bitcoin.
And that's 48,000 right now.
Yeah. And most people are like, what? Why? There's a reason. And so I'd love to tell you the fundamentals and the reasons on why this is not just this weird tech cipher funk thing that, people in hoodies and dark web do in the, bottoms of their basements. This is becoming a real thing. And so I'm going to share with you my personal journey, because in the grand scheme of things, I think I'm pretty well educated. I've been very blessed in so many ways just because of who and where I was born, right? But what I've also learned is that confusion is really the state of mind. This quote by Yoko Ono really does hit heart to where I think the state of affairs is for most people around the world, especially in the United States. And so I'm going to read Quite simply, the people in power are keeping us down, keeping us docile, keeping us consuming with this confusion. It is cultural confusion, and it is deliberate. And it seems a little bit like, what? It seems a little bit conspiracy theory. It seems a little bit out there. But there's a real big reason why. It's because most of us don't really think about what is money. How often do you think to yourself, what is money? Well, it's this thing that I earn, I trade my time for, and I earn, and then I can use it to like buy things I really want, right? But there's a lot more to it than like just simply what is money. So here, I'll go into it. There's a big problem here that Bitcoin solves, and it was actually created to solve this very specific problem. And it really is around monetary and fiscal irresponsibility. And so there's some 4 key points that I want to bring up on this and why this matters to most everybody in the world, especially since the US dollar is the world reserve currency, but it's also something that affects us all. So number 1, in 1971, the United States went off the gold standard and became fiat money. And fiat money is a term that you'll hear a lot, especially in the Bitcoin world, but in the cryptocurrency world. And fiat money is government-backed money. It's not backed by anything that has necessarily a value. It literally is paper backed by governments and guns. And that's the state of affairs that we're in today. And in 1971, when President Nixon took us off the gold standard, he literally told the American people that this was going to be a short experiment. And as you can tell, 50 years later in 2021, we're still on the short fiat experiment. And it's actually not going well right now. 2, if you look at the stats for 2020, there's this thing called money printing or quantitative easing going on. And people are like, wait, what does that mean? Well, here's what it means. In the year 2020, the United States printed over 37% of the entire monetary supply in less than 1 year. And for most of us, we're like, okay, well, how big is the US money supply? Well, no one really necessarily exactly knows. But printing all of it in less than in 1 year, 2020, that's going to have a huge impact, especially if you believe in at least something about supply and demand, right? You know, if we have like 1 million Porsches in the state of Washington, then the value of a Porsche will go down. But because they're so limited, you know, the value goes up. I don't know if that's a really good example or not. Point number 3 is around central bankers. And so generally, like the power that is given to central bankers has been completely outsized to the role that they should really play in human lives, right? So like the idea that negative interest rates or zero interest rates are a thing across the world. If you look at the history over the last, say, 70 years, from the Bank of Japan to the European Central Bank to even the Federal Reserve in the United States, those that run these central banks have tried to do the right thing in increasing these the monetary policies across these different regions, but generally they haven't been able to do so because the people don't want it. And the people that don't want it are the people that are suffering. Right, we have a lot of Americans that are out of work right now, and they really need those care packages and those stimulus packages. But that comes with a huge price to our future. And then those that are really benefiting from this quantitative easing and these stimulus packages are those that are getting the loans that are closest to the bank, and or those that are really enjoying the inflated asset prices of stocks. I mean, I don't know if you enjoy stock investing right now, but it's totally a bull's market. The prices are like insane right now, and they're going to continue to go up with another $1.9 trillion that are going to be printed this year alone that we know of so far. Those asset prices are going to go even further up, and that really does help the top 49% of Americans make more money, and those that don't have any assets, no 401ks, no IRAs, no stocks, they're going to be suffering even more. And, you know, $600, $1,200 is not really going to help them at the end of the day. Point number 4 is the inflation rate and or CPI. So this is another issue. When you think about the inflation rate, and I've, you know, enjoyed the life of an American born and raised here for quite some time, I've always learned that the inflation rate is 2 to 3%, and that's normal and that's okay. And I learned it all the way through high school. I learned it all the way through college. You're like in the inflation rate, and if you have an inflation of 2 to 3%, that means the prices are doubling basically every 20 years. And it's based on this thing called the CPI, which is the Consumer Price Index, which is built off some imaginary calculation at the end of the day that decides like what is the average basket of goods that represents the average household. And I can assure you that my household and the average basket of goods that we consume is probably not the same basket of goods that Marissa gets or Madison gets or Neil buys, right? You know, we have different taste when it comes to food, you know, our homes, you know, how we vacation, you know, where we choose to send our children to school, et cetera, et cetera, et cetera, right? And so that inflation rate is very different depending on what demographic and your consuming habits as a household. And I'll also tell you, based on what I've learned so far, that inflation rate is actually more like 10 to 15% if you're on the conservative side right now. You'll see that prices have completely increased, going to the grocery store, going to McDonald's, trying to buy a home. Those prices have increased significantly, and that inflation rate is more like 10 to 15%, which means prices are doubling every 3 to 5 years, and maybe faster as we get into more of an inflationary world. So the question is like, what is money? And this is also a problem with society today. Most of us don't actually think about like, what is money? Where does the dollar come from? What are the monetary policies and fiscal policies and the macroeconomics and all the stuff that drives like what is money and how it affects me as an individual? And I can guarantee you, as Bitcoin gains more and more adoption, even less people will really know like, how does Bitcoin work? You know, is it a proof of work consensus and like how many nodes and how do these nodes work and all that sort of stuff? No, like we don't care how Faji works. We just care that I can connect to the internet. But this is something that as we as individuals are forced to learn how to work with money, we're going to have to learn and figure this out individually very quickly. So another quick history lesson. I'm going to start in 1971 and World War II, but the impact to what's happened over the last, say, 100 years has literally started in the after World War I. After World War I, there was a lot of countries that spent beyond their means, and they were faced with some really tough decisions because all this money and debt that they had created was no longer backed by gold, and they had to make some very tough decisions, and they decided to just basically abandon gold, and off we started going into a bigger and bigger hole, which led to essentially in 1971 we went off the gold standard, and again this was like a experiment that was not supposed to be going on forever, and by forever like the last 50 years. And if you go to this there's a website that's pretty funny, but it's actually not funny too. It's called W2F what happened in 1971. I can share that website with you, but it's literally like chart after chart after chart, and you can see how this affects all of us. And it's not just the money, it affects us in terms of, buying power for, or equity. It affects us with, jobs, it affects productivity, et cetera, et cetera. And the problem is with fiat money, and that's the money that we went on in 1971, it's no longer backed by gold. And it only has value because the government says so. And we've seen this time and time again throughout the history of money. If you go back to like 2000 BC and you go to rice stones and beads and you go to country and you look at all the different variations of what money is that we've had in human history, anytime you've had this sort of like fiat money environment, it's never ended well. And here's, a picture of Germany after World War I, like their money was really worthless. Fiat money means quantitative easing, and the thing to note about quantitative easing, and this is the specific criticism that Satoshi Nakamoto, who wrote the Bitcoin white paper, had against the U.S. money, the U.S. fiat system, was the ability to just print. And we've seen this occur like year over year, region by region, doesn't matter where you are. It's not good for anybody. It affects us all. And especially recently, we've been doing a lot more printing. Like that stat, about 37% of the US dollar supply has been printed in the last year alone, and more to come, 1.9 trillion coming right now in the year 2021. This is gonna have an impact. And I guess the question to you is, what is that impact? And do you think it's gonna be a good one or a bad one? And we all have to make our own decisions ourselves. And these are taken from that site, that W2F what happened in 1971.com. But you can really see like chart after chart, like productivity versus compensation, GDP. It'll show you like the top 1% is making more and more and more, but the real wages of the middle class and below continue to stay stagnant or decrease over time. Oh, here's that chart too. Yeah, top earners earn with fiat money, and that's because most of the money is going to those that are closest to the money printing location. right? So those that can take out loans and leverage their wealth to increase their wealth, those that have access to stocks and assets and real estate. I happen to be one of those too. Like, we're making a buttload right now during this time, but it comes at a huge cost to the middle class and those that don't have assets. And it's not fair because the system actually is designed to not be fair. And those that are closest to this know that it's not fair. And those that are actually benefiting from it, we know it's not fair. And so because we know it's not fair, we really need to like stop it, because we're going to have French Revolution style. Like, we've already seen the inklings of that, like the populist, narrative, the idea, this like insiders versus the outsiders, the haves versus the have-nots. It's a real situation. It's not being made up, and it's really, really affecting lots and lots of people. And it's designed to do so. And there's this word called the Cantillon effect. And it really is true. Those that are closest to the money supply, where it's being created, the 1.9 trillion that are going to be created this year, those that are closest to that creation are going to be the ones that benefit the most and first. And everybody else, where it reaches later, will realize that the money has even less value than we thought it would. So it's really important to understand Bitcoin because, what I've just presented to you is we're in a dire state of affairs when it comes to the US dollar and the fiat system, and whether, the US dollar remains the global reserve currency for the next year, 10 years, 20 years, there's an end. There's always an end to what is the world reserve currency. But there aren't many better options because the world is on a fiat system. It doesn't matter if you're looking at the British pound, the euro, the yen, we're all on this fiat system. So what is the better option? What is good money actually? Like, how do we know? We've actually seen characteristics and we know what makes good money. And so we'll go through that. And this is what drives a lot of the Bitcoin fundamentals. And so the first thing and probably the most important thing when it comes to Bitcoin fundamentals is the hard cap supply. 21 million Bitcoins ever be created. It's hard coded. This code is open source, so anybody can go and, most of you are a lot more technical than I am, so you can go and look at the code and see that there's only 21 million Bitcoin. We haven't reached that supply right now. We're at 18,500,000. That supply is being minted regularly, and there's a whole disinflationary schedule. But the scarcity is really what derives a lot of the value of why Bitcoin is better money than the fiat system that we've been on for the last 80 years. The rate of change. So gold has value, but if you look at the stock to flow models of what is gold, it increases at about 1.5 to 2% a year. And that slow trickle rate and that knowing that rate of change has driven the value of gold, right? So we know that it's really hard to mine gold. You have to get all these expensive equipment. You got to send people to the, dark, deep ditches, and they got to dig. It's like extremely physical labor. But Bitcoin's rate is hard-coded. And at the end, the rate of change for Bitcoin is 0. And we've never, ever, ever had a money where the rate of change is 0. And so this is why we think Bitcoin is just better money, in addition to the hard cap supply. It's durable. So gold is durable. Gold looks the same in the year 1900 as it does in the year 2000, and it'll be the same in the year 2030, right? Bitcoin is also durable. Yes, you could probably argue it's based on the internet. If the internet goes down, it's not that durable, but bear with me. In this state that we live in, which is a very fully digital world, and the digital world that we're increasingly becoming, Bitcoin is durable. Fungibility and divisibility is also really important too. So if I want to buy a cup of coffee, I might drop in a little drop of gold. If I want to buy a house, I might drop in like bars and bars of gold, right? So, and it's the same whether it's this small little piece or bars and bars and bars of gold. Bitcoin is also in the same very important fungible, and so it can be divided into this thing called Satoshis. In the Bitcoin world, you might have heard this term like stack and sats. Sats is short for Satoshi. And there are 100 million Satoshis for every Bitcoin, like there are 100 pennies for every $1 US. Getting to know this math, this is a side note, is kind of difficult. and really hard to wrap your head around in the beginning. But once you get to doing it every day for 5 years, you get pretty good at it. I'm a little bit exaggerating, but I'm not. So like, say the Bitcoin price is $40,000. To make the math really, really simple, figure out the number of Satoshis in $1 you would take $1 and divide it by 8 decimal places out. Take the price, $40,000, and drop it in to take the last 5 digits, and you get 2,500 sats or 2,500 Satoshis per dollar. And so you're like, huh, all right, like what's the point of that? And here, for those that are not that good at math, like myself, $40,000, boop, 8 digits out, that's how you do the math. And you can just do this over and over again, and you might get good at it. In the end of the day, remember there are only 21 million Bitcoin at the end, and there are far more than 20 million people. And so Satoshis is the mechanism that really allows this to scale. Like, wait, you know, 1 Satoshi is now worth 0.0000001 Bitcoin or 1 cent. But in the end, the idea is perhaps 1 Satoshi will become worth equalish to 1 cent that we think of in US dollars. And then it becomes a very, very powerful force. Back to Bitcoin fundamentals. Bitcoin is also not censorable. And here's why it's important. I give the story. So there's this guy named Russell Kung, very famous NFL player. Actually, he was in Seattle, one of our Seahawks at one point. And so he puts his body on the line. He actually used those words when I heard him speak. He's like, I put my body on the line. I can't be doing this forever, but I put my body on the line so I can earn an income and create wealth. And when I travel or when I want to see my family, when I want to use that wealth for my friends and family, I want access to that. Well, there was this one year where he went to his country of Nigeria on vacation, and he went to his bank and he tried to pull out money, and they said, mm-mm. And he goes, why? They're like, well, we don't do business with Nigeria. And he's like, yeah, but it's my money. And they're like, no, we're the custodians. It's our money technically right now, and we don't do business in Nigeria, and so you won't have access to your funds. As you can imagine, very, very mad, and he went full on into the world of Bitcoin. He actually held a conference the other year about, you know, Bitcoin, and he became a super Bitcoin evangelist because to him, this hit really, really home. Like, why am I putting my time on the line and slaving away for someone else to censor and decide when and who I can do with my money and my earnings, right? We earn money not because we love money, right? We love the promise of money, and we hope that money will hold value so that the value that I create today will hold value so that I can buy whatever I want later. And if I'm barred from doing that because of you don't like my trade, you don't like, you know, what country my family's originally from, we got some problems. Bitcoin is also portable. And so, you know, that's why paper money has really won out over gold, because you can, I mean, especially today, like 90% of paper money is digitized too. So it's even more portable. But Bitcoin is digitally native designed to be in a digital environment. And so it is the most portable. Also verifiable. Gold is physical, paper money is physical. So I can go to, I don't know, someone's ledger, go into someone's house. I can verify they have the assets they say they have. But Bitcoin is a global, accessibly transparent ledger. And so anybody can go and see what's going on in the world of Bitcoin, which is really, really crazy, because you can go and see like, what are the top 100 wallets and how many assets do they have and how many transactions have they had over the last week, last day, last month. You can actually see what's going on with the supply, where it's moving. You can see all of this information to help you make informed decisions about what is the state of the money that you're leaning on and depending on. You can't do that with gold. You can't do that with paper money today. We don't even know how much is going to be printed in the year 2021, let alone 2022. And so this sort of transparency and verifiability is really important to what makes good money. So summary of the traits of money, you know, you just look at Bitcoin versus gold, and gold has been, you know, considered one of the best stores of value compared to anything in the world. And then you look at it against fiat. Fiat is, you know, generally known as very, very weak. And there's no asset class that's going to win across all different kinds of characteristics. But generally, I mean, if you look at the established history, you know, Bitcoin's 12 years old, if you want to, you know, call it that. But software is eating the world. Even if you look at the last 10 years, right? We're like in 2021 right now. In 2011, would you have guessed that we would have had Uber, we would have had Airbnb, that we would have had this thing called Cash App, and all the things that have transformed the world today over the last 10 years, right? There is this term that software is eating the world, and it really is. I used to have like stacks and stacks of MapQuest printouts in my car because I can't figure out how to get anywhere. I would have never imagined 10 years later that all I would have to do is like throw on my phone. I know how to get anywhere at the tip of my fingertips. And that is the state of the world that we are in today. So a lot of folks have always asked like, well, what are the arguments against Bitcoin? And so just listed them all out here that I could think of, right? Bitcoin has no intrinsic value without a central authority. But then the question is like, well, what gives something value, right? What gives stock value? The market gives stock value, right? What gives gold value? The market gives gold value. What gives fiat money value? The government, and also the market too at the end of the day, as you see with increasing prices. So Bitcoin has value because the market has also assigned it value. And the value right now is, as Marissa called out, close to $50,000 and rising. Bitcoin is volatile, but also like that's one argument. Yeah, if you look at any asset, if you look at Bitcoin, the price has gone like this, up and down, and it is quite scary. But if you look at the adoption of any new asset, I mean, look at Amazon stock in the first 10 years of its life. It was up and down. And look at where it is today. You look at anything that's new, especially when it's in its alpha and beta phases, as people that live in the world of tech. They're meant to be volatile, but with Bitcoin, like the volatility has been generally going up. And so I would describe it as an old man going up the staircase carrying a yo-yo. Bitcoin doesn't scale. But then I would say there's many, counter reasons. It does scale, actually. Technology will continue to innovate. It's disinflationary. And so it does scale without losing value. If the price of Bitcoin goes up to like $1 million, $100,000, whatever the price is, the supply and the demand don't affect each other. Like the supply is the supply is the supply, and there's no other asset in the world that's like that based on fundamentals. And then we also talked about Satoshis. It's 100 million Satoshis for every one Bitcoin, and that is truly scale. Some people will say, well, the Bitcoin miners will quit because there's this thing called the halving process where the block rewards decreases every 4-ish years. And so like, it's going to be so little that they're going to quit. Well, actually, what that'll incentivize is for like the Joe Schmoes, the individual miners to continue because transaction fees will continue to be lucrative, but the giant mining pools will no longer like exist, which might be actually a good thing. People will say like Bitcoin is deflationary and that's bad, but it's actually no, disinflationary. It's the supply is going from 18,500,000 Bitcoins right now to 21 million, and it's going at a slower and slower price, right? Slower and slower inflation schedule right now. So like the block reward is 6.25 starting in 2024. 4 years later, it will be about 3.125, and then a half of that another 4 years later, and continue on to the long tail. But the supply is hard capped. There will never ever be more than 21 million Bitcoin created. Some people will say like a bug could destroy Bitcoin, or it could be hacked, and there's lots of, it's very, very risky. Well, I mean, yes, that's totally possible, but it's open source. And so you have a network of thousands and thousands of machines and computers and people looking at this open source and looking out for this, right? So I don't know how big of a risk is this? I'd say like not that big. There's another big one. Bitcoin wastes energy. And you go like, yeah, it does use a lot of energy, but like gold uses a lot of energy to mine it. USD and banks, all the physical like locations and the bank tellers and all the electricity and people driving through and from, and Netflix uses a lot of energy. If you're going to use energy, shouldn't you use it to secure the most important thing in the world, which is this monetary network? Your decision. And then Bitcoin is only used by terrorists, and you're like, yeah, I mean, yeah, but really like terrorists will use whatever they want to use, right? And the US dollar is actually known for being the biggest offender of, being used by terrorists, especially paper cash, right? And so And if you also look at Bitcoin, remember it's the open universal ledger. And so if you're going to actually do something bad, Bitcoin is probably not the best choice because everything has a trail to it. And then, just another reminder, I'm, probably kicking a dead horse a lot, but all fiat money ends badly. It doesn't matter if it's rhinestones or agri-beads or Turkish liras or Zimbabwe, German marks. I mean, the US is pretty much in inflation right now. We're headed for hyperinflation. So good quote. It's another reiteration of the Cantillon effect. Whoever's in control of the money without a cost to produce will produce. And it doesn't cost the Federal Reserve or any of these central banks anything other than a literally control P, figuratively and also literally, to print more money into the system. And at the end of the day, like remember I told you in the United States, 51% of Americans don't have any assets, don't have any of the 401ks, IRAs, stocks that a lot of us are afforded and actually are like doing really well as a result. This system that we're on is designed to be unfair, and it's taking from the bottom to feed the already wealthy top. So I ask people, like, you have to make your own decision. Please, if you can, like, do your own research. I'm happy to guide you to resources for the pros and cons of any of these arguments. But at the end of the day, like when it comes to centralization, it's not a good system. You have points of attack. You look at the target attack, Equifax attack. Those are like literally like big X's over their heads for hackers to go in and steal data. And so we do need to move to a more decentralized future. We need to separate government from money, and money needs to be a fair and equitable system for all humans across the world, not just for those that have. And that would be the end of my presentation. Oh, and I do have a lot of resources. So if you do want to buy Bitcoin, there are some really great resources. I recommend Swan because they literally have the lowest fees. And I know a lot of people that are buying Bitcoin early on aren't going to be buying like millions of dollars. Not that most of us don't have millions of dollars, right? So if you're going to buy $1,000, $100, $50, you don't want to be paying the fees. And generally, most of these systems charge these fees to the bottom people who like are buying $10, $50, $100, which also makes me really, really mad. And so I really recommend Swan because they don't do that. If you're going to use a Coinbase, which is the thing that most people will turn to, don't use Coinbase because Coinbase does that offense. They charge you the most when you're buying $10, $100, $1,000. Use Coinbase Pro if you have to, but I also recommend Swan because of the lower fees. And they also have a really great UI UX for those that really care about UI UX and consumer usability. They have really great educational resources, and I really believe they're one of the better ones. So I did that in 33 minutes. Hopefully it wasn't too fast, but do you have any questions or like thoughts, counter arguments?
Yeah, sure. What about like I've traded a small amount of crypto. One of the things that I like about Coinbase is that it's been around for a while and it seems like it's stable, and I know you shouldn't keep if you have a large amount in the online wallet, but if you are wanting to be able to like trade quickly or something, then you kind of have to keep it ready to go maybe. So what about it? Like, I haven't heard of Swan before. Like, is there, do you think they have a similar, level of like stability with their online wallets, or is that something to be concerned about?
I mean, I think anything with a centralized application or entity in control over your assets, it should be concerned regardless if it's a Coinbase or a Swan or a Bittrex or Binance. So always proceed with caution. I mean, Coinbase's great benefit is that it's sort of a market wallet. So you can hold a variety of different assets in it, including Bitcoin, and you can move it from Bitcoin to Ether to USDC or whatever type of asset you want, all within one application. But then I would also recommend that you check out something like Coinbase Pro. The fees will be less, and it also will give you a lot more flexibility in terms of accessing other kinds of assets, not just the ones that Coinbase Consumer allows you to.
It used to be called GDAX, right? or no? That was a different one?
Maybe that, I don't actually remember the old name. Coinbase Pro has been like ingrained into my brain.
Yeah.
But happy to share links if you're interested.
Yeah, I just remember debacles like Mt. Gox and some of those scary stories.
Exactly.
Hearing about people who are digging through landfills trying to find an old hard drive that supposedly has Bitcoins on it. And it is scary in that way to me. Like, how tangible is an asset? Is it really? And how easy and susceptible is it to fraud? I've heard that's happened quite a bit.
Well, all of this relies on your own personal responsibility. So right now we're depending on centralized infrastructure and entities to do that for us, like banks and other types of financial applications or products. With the world of Bitcoin is the individual starts to take responsibility for the safekeeping of their assets. And it's a totally different ballgame. When you look at these hacks or issues that have happened, it's because people entrusted this centralized entity to take care of their assets. And two, like, how many humans would you trust to like take care of your wealth? I know we do it today with banks, but banks haven't done a great job. If you look at, I have to go to this story too, because in the 90s, I'm a little older than I look. I used to put my money into a savings account. I used to get 6% interest on my savings account. If you can remember that far back, this is in the 90s, this was actually possible. Today we're getting 0.01 or like negative interest rates, right? But the banks are still making money. They're still making interest off these loan products, and they're taking all that interest and they're paying it out to shareholders. And so we, the consumers, are funding, again, the shareholders and investors and the banks. And so I think, I don't know if that necessarily answers your question. It doesn't really, but it gives you a different angle. Like with the ability to manage your own assets comes personal responsibility, and you decide whether you're going to put it into a centralized place or multiple central places, or self-custody it and manage the whole like private key, public key, password, all that sort of issue. But you have to decide what is your level of risk and who you are and what you're willing to do around that. And that's a whole nother ballgame. It is scary, but it's also really important that we learn how to do that.
Yeah, I just think the general public doesn't necessarily have that level of expertise to really understand what the risks are with a lot of these things. And it's definitely scary in that sense, whereas banks, or at least they're institutions that have existed for a while and they're backed up to some extent. Like, you can get certain amounts of money out if you have like an account, then the bank goes down and the government will back some of it. But it's, I don't know. I certainly like, I love everything about like what Bitcoin is trying to solve, but is Bitcoin the solution? Will the governments decide that this is something that we need to work with, or is it something that Janet Yellen needs to regulate? And I think governments don't like ceding control at all.
No. I mean, this is where game theory comes in, right? So governments obviously don't like this thing called Bitcoin. They would prefer to keep the power and figure it out on themselves and manage our way out of this, financial looming crisis that we're in. But then game theory comes in. So several points on that, like the IMF, International Monetary Fund, met last year. The G20 decided they need to all move through this thing called CBDCs, right? So those are like central bank digital currencies, which basically is an on-ramp to this whole like digital crypto world as it is, right? So if you just look at that data point alone, you're like, I think something's happening, right? If you also look at the game theory of countries, so if the US decides to like kill this and they try to go the way of China tried to ban this and said Bitcoin's illegal and it's all blah 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 blah. Like, look at what happened. They weren't able to do that, and that's China, and they have like super communist, control over their people. So like, say Yellen does that, and she's like, Bitcoin's banned and we're going to come into your homes and take all your ledgers and shut down Coinbase and that's it, right? Yeah, some people will be very pissed off. But at the end of the day, like, you can't kill Bitcoin because it is decentralized. Secondly, it also puts US into a very, very difficult position. So the US is already in a difficult position because you have countries like Saudi Arabia putting 6 years already into this thing called the CBDC. They're already hooked up to the UAE and the Bank of Japan in terms of like the CBDC on rails. The US hasn't even started. I mean, they've started, but like not like that, right? So if you look at that, that's already like reading between the tea leaves. Also, if you look at Bitcoin, so now it's up to like $48,000 per Bitcoin. We have 187 countries in the world. I used to serve the bottom like 133 with a prior company that I worked on. So say you have the countries like Libya, and you have countries like Turkey and Venezuela and Argentina, and they all decide to be like, crap, our fiat money sucks. What are we gonna go and print our own new one and call it good? Or are we let's do this thing called Bitcoin. So what if, the bottom countries start adopting Bitcoin because they have no other choice and they start rising? So then the US, like the powers will shift. I mean, that's me reading between the, lines, but there's big trouble for any country that bans Bitcoin, because that'll be more ammunition for those that are anti-US to adopt Bitcoin. And we're already seeing that. Like the country of Iran is already investing in Bitcoin very, very strongly, right? You look at Russia, you look at China, they all know that this is a thing that'll beat down the United States.
And so I'll, speaking of the uninformed public, so I'm very, very new to this. I knew basically nothing at all about Bitcoin. So if everyone would forgive me for asking a basic question. So like, where does Bitcoin come from in the first place? Like, I know there's the whole like Bitcoin mining, but like what actually happens? Like, what is that?
Oh, it's kind of tricky. There's like a complicated series of mathematic proofs that computers can generate, and they scale up and get harder and harder and harder over time. Initially, they were probably something, maybe if you had like a pencil and paper, you could have solved like the first one. I don't know. It's possible. But these days it requires tons of GPUs, tons of ASICs, tons of these computing like resources pooled together to try to solve any of them. And it consumes about as much electricity as Argentina.
So like, who created those? Like, they almost sound like puzzles or something.
Yeah. So I believe there is an entity or a group known as Satoshi Nakamura. And no one knows exactly who that is. Like, supposedly they're Japanese, but we don't know for sure. Whoever they are, they probably have a lot of Bitcoin. Anyway.
They still exist too.
Yeah.
Isn't this like it's based in cryptography, right?
Yes.
And which is, even predates computers, I think. But isn't it something like they come up with some sort of whatever formula, and it's something where you're not having to come up with every step of the way, but you come up with some sort of formula which has a built-in like series where you can get to the next level if you crunch like the previous answer or solution and do more computation on it. And so I don't know, this is kind of speculation, but you can correct me if I'm wrong. And so it's like, once they came up with this formula, it's like they just need to keep crunching the numbers and they get to like the next level. Sort of like maybe like right now in math, there's like no way to calculate like or predict like, or not a fast way to predict like a prime number, like, really far away or something. But they can do it, but it takes like a really long time or whatever. I think maybe it's something like that. So it's like there's no like mastermind who came up with all these answers to these puzzles and has the answers. They're answers that can only be gotten to if you crunch like the numbers. And so that's why it takes so much computational power. All these people, you have people who like build a shed in the snow in Scandinavia where it's cold, so that they can put like 50 computers in there and save money on cooling costs. And all those computers are like crunching these numbers to like one day mine Bitcoin.
Yeah, there's definitely that component, but there's also the blockchain itself, which is, as far as I know, a cryptographic tree that contains every transaction, never an occurrence in there. And something that even coding dojo graduation certificates, some of them at least, are in that tree.
Yeah. So there's a whole like cryptographic algorithmic process that creates these Bitcoins. And it's hard coded. It's in open source software, so anybody can go and look at that. And I can do another session on that sort of stuff, high level, after this one sometime, maybe next week. But there's lots of reasons on why this, how and why this is created. Actually, I have a theory on Satoshi Nakamoto. I think he's from the year 2060, and a bunch of people realized like the world has gone to poop, and they know the answer to the problem, and they send someone back. into the year 2008 to release this white paper, the Bitcoin white paper, which is so, magically written, and the way they released it and that whole story is pretty like crazy that one person, one nerdy guy that knows how to do cryptography was able to do that. So I think it's someone from the future that was sent back, but some people say it's Elon Musk, some people say it's, I don't know.
Aliens.
Aliens, yeah.
It definitely does sound like the plot to Steins Gate in a strange way, but yeah.
Madison, I don't know if that answered your question.
Yes, that definitely. I'm going to do some more research on it, but that definitely gave me a better idea. So thanks.
I linked these 2 videos. I don't know if you approve of this one, the second one, Ari, if you've seen it, Bitcoin Beyond. I think it's a fairly recent documentary.
With Fundrise.
And only 30 minutes. I thought it was really good. One of the things that's really interesting about it is like you're talking about, like it's for so many people, it just seems like this magical thing that is just created out of nothing. And the documentary did a good job at drawing the parallels to how it's not like that, because it takes the math problems, which requires a computational power to generate, and that's the equivalent. That's why they call it mining, because it's equivalent. It's like the equivalent of the work that has to be done to actually create the resource or find it, and so it's not. It doesn't come out of nowhere, but because of the way it's like structured, it also can't. It's more sound physically, like physics, because you can't like give it a negative interest rate or whatever, or that's like things start going so wrong with fiat when they're trying to control it, and they're trying to control it against the the natural progression of what is happening in the world. Whereas with Bitcoin, like you can't do that. You can't screw it up by forcing it to have different interest rates or whatever.
Right. It's a code-based. The monetary and fiscal policies are baked into the code, and it's known to everybody.
Yeah.
Yeah, it's very, very important.
I have a question. That schedule, the predicted like year that the final Bitcoin will be mined, will that change if there's like significant computational advancements where miners are more efficient or more transactions occur, or is that something that cannot be changed because of some hard coding? Do you know?
Well, it's based on like every 210,000 blocks that are created. And so if that rate changes, and generally like, we think it's every 4-ish years, but that date changes depending on how the mining has gone over that 4 years. And so it's a guesstimate based on.
So if there was like a revolutionary advancement in mining technology because of just computers becoming much better, and also more transactions are happening, which are more opportunities for mining, I guess, it could jump the schedule forward?
Potentially a little bit. I don't actually have an answer for, but in theory, maybe.
Honestly, if a company like NVIDIA is able to create like GPUs that are so good at mining, why don't they just mine and not sell them to us? So I think it's definitely an interesting question on that end. And certainly I think from like government budgetary standpoints, like the ability to print money is such an important tool in their arsenal for controlling the macroeconomics of a country. I have a hard time seeing how they're going to relinquish that.
Well, yeah, they may not. Hopefully they don't have the choice. That's the hope, in my opinion. It just overpowers them.
Have to actually budget and balance the economy for once. That'll never happen.
Yeah, the hope is that this will be the way the people choose for a peaceful transition of power from the US fiat system to whatever that next global reserve currency is. And it doesn't have to be a war.
Yeah.
I think for me, one of the concerns I have is I don't actually see people ever spending Bitcoins. Like, what do you actually buy with them? And at one point in time, I think a lot of its value was derived from buying illegal services and goods on Silk Road. And now I think there's a lot you can do these days, but you hear these articles of, oh, I bought sushi at a restaurant with Bitcoin, and now it's the equivalent of $80,000 or something like that comes up.
Well, I would say like you have to look at Bitcoin differently than our current money system. And so I would look at it as more like a real true asset, like your house, right? You wouldn't like go and spend pieces of your house to go buy a sushi meal. You might like borrow against it with a home equity line of credit and pull out, $10,000 for the year for your eating out, and then use that to like so it would be more like a store of value and a store of wealth. And then, maybe you accumulate enough Bitcoin where it becomes like a true asset where you can like will it down, give it to your children and their grandchildren, and they can continue to create their wealth off of it. So it becomes more like that. And then you have like innovations like Strike and Lightning Network, which actually is for the payment rail for Bitcoin. And so that'll help you, like Russell Kung, the NFL player that I told you about, he's actually getting paid half his salary now in Bitcoin using Lightning and Strike. And so those sorts of like layer 2, layer 3, layer 4 technologies are being created as we speak. But really the fundamental is the store of value and this like asset versus like money.
And I have heard that you can buy a Tesla in Bitcoin now too. So
Thank you, Elon. Yes.
The other thing that I heard that's really interesting is based on your question, Marissa, like you're thinking from our point of view as well, like where we live, and in other countries where their banks are much more unstable, they don't want to put their money in the bank because it's crashed before and their family lost a bunch of money and stuff. And so for people like that who are unbanked, as they call them, Bitcoin can be one of the only place that they could actually put their money where it cannot be taken away from them, because they're the only ones that can access it if they keep their passwords or whatever secure, and as long as they have access to the internet.
On the idea of unbanked, I mean, most of these folks don't have access to financial products, but all they need now is an internet access.
Yeah.
And you have access to things like Bitcoin, but you also have access to all sorts of different kinds of financial products. Like they can go and take their crypto and park it at a thing like BlockFi and get 6% interest or 8% or 15% interest for putting their crypto there. And so it's a nice alternative way to give people access to financial products. I mean, even like you, Marissa, Madison, and Neil, you could take your earnings, convert it into a crypto, park it at a BlockFi, and get 6, 8, 10, 15% yield interest.
And how does that interest get accumulated? They're trading it for you or something?
No, same thing that banks do today. They take your, maybe you're
invest it, right?
Yeah, no. They take it and they loan it out. So they'll take I'm making up a number, 10 Bitcoin, and they'll loan it out to a bunch of people who are paying 20% or whatever interest rate on it. And then instead of keeping that interest rate for themselves or keeping that interest rate and paying it out to like stock shareholders, they pay it back to you, the consumer.
Wow.
And so the real attractiveness of crypto and DeFi, the thing that you might have been hearing at, is because it really is for the people by the people, especially now because you're early. But take it with a grain of salt, not investment advice, and it is risky, right? Like once you move out of Bitcoin, you're going into other kinds of crypto assets. The increase of risk goes up, and so don't do it with like your entire life savings necessarily.
What if you mentioned about like the internet going down as like one of the only big risks? Do you know if it like somehow completely shut down and then but came back up, would the Bitcoin still be accessible?
I don't know.
It would have to be based on like the hard drives and stuff where blockchain is saved or something.
I think you have it in cold while like on a hard drive, then that's independent of the internet because it's whatever the hashes are that you've solved, those are being stored. But
but remember,
it kind of depends on whether like the entire network and all the nodes in the network can still agree on, hey, this is the exact transaction history.
Yeah.
And I don't know if like a very serious situation came up and they couldn't agree, what would happen?
Well, where is that single source of like blockchain truth?
There is none.
Yeah, well, it's stored on everyone's computer, right? Okay, so as long as enough people like still have their hard drives intact when the internet reboots in this in this scenario, then they could resume.
We downloaded it a couple of years ago and it was already over 100 gigabytes. So I have to imagine it's getting to very large, ludicrous sizes at this point.
Remember, the longest chain wins. So if there's, different versions of the truth machines come up, the longest chain, the ones with the most agreed upon will take over as the chain.
Yeah.
And hopefully that stays decentralized, because I could certainly see governments colluding to control enough of those nodes and then having the truth of what the blockchain is at that point.
Yeah, but there's not enough people in the governments.
Mm,
They would have to access the population, like large subsets of their own population and get them, or
there are
take
enough exploits on whatever servers those are running on. I certainly think nation states could have those.
Yeah. What about how do you deal with the like inheritance issue, like for your family or something, that make sure that they have a way to access your coin if
Yeah, that's still a work in progress. I mean, right now it's managed between myself and my husband. But we have been like we built a trust, so we have a trust entity, and we're building all the paperwork around it for our children and extended family to be taken care of.
And so your private keys are saved in this trust information somehow?
Some variety of that.
Is some variety enough for them to access it? Don't they need the whole thing?
Well, it'll have to be a little bit creative, right?
Yeah.
Just like when you manage your private key, you also have those safe mnemonic words.
Yeah.
And so you never want to have those be in the same place. And if you're measuring, I usually take care of this for corporations, and I'm taking care of like tens of millions of dollars at a time, right?
Yeah.
And so typically I would never have these two pieces of information in the same room, let alone the same building. Mm-hmm. And then even if they're separated, I would take the mnemonic words and I break it into like 5 or 6 different pieces, and also hold those in different places, and no one person would know where everything is. So there's like you make it into sort of like a treasure hunt.
Yeah.
And that's how we manage it in the corporate world. Like no 2 people can enter a safe to get, part of the key. You have to have at least 3 or 4, sign off with blah, blah, blah. Like we have a lot of procedures to manage that. And so you would probably want to do the same thing for your own like family wealth, playing around this.
Interesting.
Hopefully we can get some elaborate system where you have to turn multiple keys at the same time. That'd be the best.
That's the idea. And there are actually new companies that are being formed right now that actually do this for institutions, because most institutions won't go and like create this, crazy policy from scratch and deal with this. And so there are institutions now that also will do this on behalf.
Yeah. But like for if you have a cold storage, like a USB thing, then technically the only thing you need is like a couple digit PIN number to get in, right?
Yeah. And also I think you still need the private key to be able to get into it, like one of the other keys.
I mean, I thought at least for the one that I have like a nano ledger, an old one, and
okay.
Once I plug it into the computer and put in the PIN, like I can trade my stuff without having to remember anything else.
Oh, really? Okay.
I think the private keys are stored on there or something. I don't know fully how that works.
But you want to make sure you still have, what your private key is, what those words are, and keep
the words. Yeah, but aren't the words for like kind of like a password recovery or a recovery thing? Yeah. They're not. You don't need the words to actually make any trades or anything, right?
Yes, but you'll need it to access your funds. I have actually a real life story where I lost a ledger with $10 million on it.
Oh my gosh.
Yeah, our house was robbed. So if people start finding out that you have any amount of crypto, even if it's not your own, like it's my company's, you become a target. And so they burglarized the house and they took it. So I used those safe words to get into the account and transfer the funds out of that account that was tied to that ledger.
It was a USB.
Yeah, ledger.
Yeah.
Yeah. So just, make sure you keep that safe. And then, hardware also does fail. Like sometimes the ledgers would fail and there'd be some sort of like, hardware software issue. And so you also want to have it accessible for those issues.
Well, probably the most technical set of questions you've gotten from one of these, but answering so many of them for us, sorry.
Yeah, I think you guys are probably the most technical group anyway, too. So it's a nice change of pace and also good to hear like different kinds of questions and what's top of mind.
I know from my perspective, it's always a question of how exactly can I integrate blockchain or Bitcoin technology into what I do? And so far that connection is a lot trickier to come up with, but certainly something that people are investing a lot of time and effort in.
Yeah.
And hopefully we can bring back the block certs that we've had in the past.
Yeah, I think someone posted that recently, and it's in progress, but I don't really know what it's at. So you can help the coding dojo there.
Unfortunately, I think without Dan being the driving force for that, it's maybe going to require somebody to be in charge.
Dan Ustra?
Yeah, unfortunately, he left.
He left?
Yeah.
I didn't know that.
Well, definitely reach out to him and tell him goodbye on LinkedIn or wherever. I definitely miss him.
Bummer. Well, I also want to be respectful of time, but if you have any other questions, or if you want me to do another version of these some other time, happy to. Like, I could literally talk about Bitcoin all day long.
One more quick question.
Yeah.
I know you're not a financial advisor or have no crystal ball. Do you think it will crash below 20K this year before it raises to wherever it goes after that?
I will say it's not impossible, right? But if you look at the history of Bitcoin over the last, say 10-ish years, like the corrections are generally at most about 40-ish%. And so the crash would maybe go from like we're near 50 to 25 if we're lucky. I mean, like for those of us in the space, we're like, just stop going up for a little bit, just like hang out and like annoy the crap out of as many people as possible and just don't do anything for a while or go lower. Like we're happy with that. But it's not doing that, obviously. So who knows? I mean, it could be a flash crash too. So anybody that's trying to time the market and buy at the dip, like it's really hard to do that, even if you have all the bots and stuff. So I do say like dollar cost average. Swan helps you do that, automatically. And, don't hope for the crash. I mean, it probably will. I don't know. Usually it's like 37 to 40% market corrections, and then it does its thing. So yeah. It could be different though, but it's also less likely too, because you have larger and larger institutions right now that have been buying in as, very publicly, over say $3 billion worth in the past 6 months. We have over $30 billion in the pipeline with a couple of hedge funds that I do know about. And so there's a whole bunch of hedge funds and, folks that I don't know about. And so that's a lot of Bitcoin buying that's going to be happening in 2021, $30 billion. And so that's also another indicator of what's about to happen.
Yeah, it's so hard. I keep wanting to invest, but I keep on seeing it go up. Like ever since it like went up to 9,000, I'm just like, oh no, it's too late now. I've missed the chance, and then it just keeps going up again.
Like, it's not too late. Even if like, here's another way to think about it as an investor. So if you put in $600 in whatever, or $60, whatever it is, like that's your bottom worst case scenario. It could go to zero and you lose $60 or $600. But say it goes 10x from here, then you've made, I can't do the math, $6,000 or $600, and that's your upside. So just manage your risk tolerance there. Like, what am I willing to lose? But like, don't have it be zero. So I'm going to put $1,000 bet on. If I lose $1,000, that sucks, but it's not going to be as sucky as if this went 10x and I lost it on another $10,000, $9,000 gain. And go from there, and then figure it out as you go along, so that you don't have zero, because this really is a very important asset class. And those that are far smarter than I am are already betting on it too. So, and they're using it as a hedge. So maybe think of it that way.
Yeah.
And it's not too late. Yeah.
Thanks.
Yeah, thanks so much for taking the time to do this. I feel like I learned a whole lot in the last hour, so that's awesome.
You're welcome. We recorded it, so I'll just make sure I didn't use any bad language, since I'm trying to like not have the potty language, especially teaching the Saudis. And we'll post the recording and see how it goes. But let me know if you want to do another too. Happy to.
Awesome. Thanks. Have a good one.
Thank you, Ari.
Thanks so much.
Bye.
Thanks for tuning in. This podcast is non-technical, fun, informative way to learn about money, Bitcoin, blockchains, crypto, and digital assets. This podcast is not financial advice, and your reactions are your total and complete responsibility, y'all. Now, thanks again, and enjoy the show.
What are you doing?
Stuck inside.